Do you receive a tax refund from your salary at the end of the year? Well, this video will show you how to record that in your QuickBooks Online home finance records. Your income tax withheld is not really what you pay as income tax expense. Your employer withholds income tax based on an estimate of what your tax expense will be. You need to file your tax forms to know how much your income tax expense really is. If your employer withheld more than your tax forms require, then you will get a refund. The refund means you overpaid that specific expense, the income tax expense. Therefore, when you deposit the refund, it will decrease your income tax expense for the year. So how exactly are you taxed in this country? Well, during the tax year, you pay your taxes by way of your employer withholding some of the money from each of your checks. Then after the year is over, you have 3 months to file your taxes for the prior year to find out how much you really did owe for that prior year. Once you fill out the tax forms in the next year, you will know the correct amount that you should have paid for the prior fiscal year. And if the tax forms indicate that you get a refund, that means that the income tax recorded during 2021 was too high because you didn't know that you were entitled to a refund for overpaying it. So therefore, you need to make an adjustment to your income tax expense for 2021 in order to get an accurate profit and loss for that tax year. For example, let's imagine in our little story, February 5th, Joe received and deposited a federal tax return of $400, but he received it after 2021 was finished. February 6th, he received the state tax refund of $150 after 2021 was finished. Before you record receiving the refund in 2022, you must first fix your 2021 numbers. You now know your real tax expense for the year because you now have your refund. So, what if you need precise amounts for your annual profit and loss? You will have to make an accountant type of adjustment for the refund to make the tax expense exactly correct as of December 31, 2021. This will make your 2021 profit and loss accurate regarding your annual income tax expense. As of December 31, 2021, that refund was owed to you. You just didn't know it until you filed your tax forms until after 2021 was over. Therefore, before you make the annual refund adjustment, you must add to the chart of accounts a current asset called refund receivable, and this will represent the money that you will receive in the future after December 31 of the year in order to record the refund. So, here's what we do. We click Accounting, Chart of Accounts, then we click New, and the type of account will be Other Current Asset. The detailed type is not relevant at all. You can just choose Other Current Asset as the detailed type as well, but the name should be in capital. You could call it Tax Refund Receivable. and it will represent what is owed to Joe as of December 31. Save and close. So what happens on December 31 when you make the adjustment regarding the refund? Well, your income tax expense will decrease because you know the amount you recorded during the year was too much because you got a refund. So the income tax expense will decrease for the amount of the refund to make that number correct as of December 31. And refund receivable will show up on your trial balance and on your balance sheet as of December 31 for the amount that you will receive after December 31. That's what it represents. Then, the day you get the refund, which is actually 2 or 3 months into the next year, the bank balance goes up because you just received the money. And if you received the money, that means refund receivable will decrease because it's supposed to represent what is owed to you, and nothing is owed to you after you physically received the money. So now let's record the receivable for the refund as of December 31, 2021. The total amount receivable was $550, and we have to decrease our federal income tax expense and state income tax expense for their respective numbers so that you can have an accurate profit and loss as of December 31, 2021. Now, the way to record this is to make a journal entry. Click New and go across to Other and go down and click Journal Entry. The date of the journal entry will be December 31 of the fiscal year you're working in this example, 2021. Now, don't worry if you don't have experience doing journal entries. If you simply repeat what you see from the way I am showing, then doing it this way will always work. First, the account you choose on the first line is the tax refund receivable account that we just made, and we'll put in the debit. Trust me, you don't need to know debits and credits. Just know when you're adjusting for the future refund, make tax refund receivable a debit of the total amount you will receive and keep pushing tab. Now, on the next line, you have to reduce your federal income tax only by the amount of the federal tax refund you will receive. So therefore, you will put federal tax income on the next line and put the money amount in the credit column. Same thing with your state income tax. Put it in the credit column on the same line as the state income tax. This will reduce the income tax that you recorded because it was too high, and you know it was too high because you later got a refund. And this will indicate that your balance sheet will show that you will receive in the future $550 after December 31. So we click Save and Close. And now when we click Reports, Profit and Loss, okay, you can see that your federal and state income tax has decreased. And if you click Reports, Trial Balance, you can see refund receivable has been established as $550. Now let's imagine that it's actually February 5th and February 6th, and that you're actually recording the refund. What you will do is for each of the checks that you get, you will put a plus to the Chase bank account and a minus to refund receivable. And that's something that you can record in the register if you choose. So since they were deposited into Chase Bank, you can click Accounting, chart of accounts, open the register for Chase Bank, and then you can click Add Deposit. And the first deposit was actually February 5th of 2022. February 5th of 2022, the account that goes down is the tax refund receivable. Tax refund receivable goes down because Chase Bank goes up because it's a deposit. And of course you have to scroll to the right, and the deposit amount for federal tax was $400, and that's the amount that went into your bank account on February 5th. See? February 5th, tax refund receivable for the federal tax, only $400. And then, see, $400. And then click Save. Now, February 6th was the day that you got the state income tax. But again, that decreases your taxable refund receivable. You have to scroll down, scroll to the right, and scroll up if your window is too small. And then the state tax refund was only $150. So these are the dates and amounts that you received your federal and state refund. So we have to hit the record button, click Save. Now when you click Reports, Trial Balance, you can see that tax refund receivable is now 0 because you recorded receiving it into your Chase bank account. You should also notice that your federal income tax is down to $500. If we double click, you can see that your federal income tax was $900, but that was too much. If you received a $400 refund, it means that you should have only paid $500. So $500 is now the correct balance as of December 31.